It's about that time of day again, folks. Boy, that time flies when you're having fun and making money. Welcome back to your nightly newsletter. Today is the 5th of February, 2014. Be careful what you wished for. Remember what happened last night? I sat here just about 24 hours ago, and my exact words were, those narrow ranges that we saw on Tuesday were likely to result in some big opportunities today. I'll tell you right now, we got exactly what we bargained for today, and we made a killing today in our live trade room on it. What was very interesting was how the day played out. So let's take a look at what happened today. And then you know me, we're going to make sure we finish up by taking a look at the charts because tomorrow we get another big day filled with opportunity. So we're going to finish up on some charts. First of all, what happened today? Well, we were expecting some big moves today. Why? Because yesterday we had some very small moves. Narrow range on Tuesday, big range on Wednesday. With the exception of crude oil, which was kind of sloppy all day today, we really had volatility that was just incredible on Russell and gold. But what's really amazing about it is that if you look at the chart at the end of the day, you'll see we pretty much finished right where we started the day. Now remember, I always tell you guys there are only two news reports that have long-lasting impact. What are they? Non-farm payrolls on Friday. The other one was FOMC. So this morning was a good example of it. Let's talk about as this kind of laid out today. First things first, we expected a volatile session, and this morning we had 8:15 a.m. ADP Employment Report. Now, don't confuse this with non-farm payrolls, but boy, you would have thought it was non-farm payrolls this morning if you were watching gold. Now, the good old GC contract, the gold futures, at 8:15, what did we see? Employment numbers came out weaker than expected. I immediately notified everyone in our trade room that that was going to be bearish for equities, bearish for crude, and bullish for gold. Now, at 8:15, the Russell had just started moving. Remember, it's an E-mini, so 9:30 is when we start trading the Russell. But gold was easy pickings, and it was classic. This morning, 8:15, ADP Employment comes out lower than expected. We buy gold. Gold jumps all the way up to the levels that we had reported last night. Go back. Don't take my word for it. Go back. Look at the charts we posted. And you're going to see those resistance levels right at the highs of gold today. I'll let you check them out on your own time and you can see. I'm not blowing smoke. So we buy it all the way up to the highs, and sure enough, what happens? It comes tumbling right back down in. This is what I love about being a trader. What I love about news. But wait, Joe, didn't you say you don't trade news? No, of course I don't. I'm not trying to trade the news. I'm trading reactions, just like you should be. I don't care what the news says. But what I do know, though, is that when gold jumps like that, I'm buying. And so we buy it on the way up, took our profit at the highs, and then sure enough, what happened? Comes tumbling right back down in. If you look at gold, gold went higher today, but it only closed 25 basis points above its open. So you can see gold went straight to the roof and then came right back down pretty much to where it began. That's one big clue. And we're going to listen to a couple of these clues today, and you're going to see how the markets are pretty much waiting for Friday's non-farm payrolls. So with gold jumping up and then eventually coming right back down to where it began the day, doesn't that tell you we're waiting on something? Absolutely. In addition to that, we had ISM Non-Manufacturing, right? Big news report today, about 10 o'clock this morning. Now, ISM came out better than expected, but if you read into the news report today, you saw that new orders, they're still blaming it on that snow, right? New orders continue to be lagging. And I think what's happened now is that weather we got in the month of late December and January, basically, it lasted about 2 months. I think it's still happening in places of the U.S. right now. But that bad weather, I think, is discounting these reports, and we're going to have to wait until next month to really get a report that doesn't have some asterisk next to it. Okay, so ISM Manufacturing comes out better than expected. But again, the new orders were weak, and we saw that right away at 10 o'clock. We were heading into crude inventories. And so immediately I alerted everyone in the trade room this morning. We had ISM numbers coming in out better, but again, reading through that report, it was easy to see it was going to be a weak report. Equities drop, crude drops, gold kind of sat sideways. So this morning, we really had a great opportunity at 8:15, reacting to that news, at 10 o'clock, reacting to the news. By the time we saw inventories on crude oil, we had already made our daily goal. Most of our members had already packed up and gone, might play golf, right? We made some very easy money right out the gate. By the time 10:30 rolled around, crude was stuck right in this consolidated range and then shortly afterwards tumbled itself. So from 10:30 to 10:30 to 11:30, something like that, crude drops, but again, comes right back up and finishes the day. Went lower, but really not those big moves that we were expecting. We get some great breaks up or down, but by the end of the day here, price finished the day pretty much within the same range we were when we began this day on Wednesday. Markets are clearly now trading in balance ahead of non-farm payrolls on Friday. This is important, guys. News comes out, price jumps up, ends up coming back into the range. Crude, price goes lower, ends up getting sucked back up into the range. I'm telling you right now, it feels like everybody's waiting on Friday's non-farm payrolls. But again, I don't really care. It doesn't matter to me. Tomorrow morning, I'm going to come right back here, open up the trade room at 8 o'clock, and we're going to find those trading opportunities no matter what's happening tomorrow in the markets. So crude ends up lower by 45 basis points, just above 97 even. Gold went higher today. Again, that ADP Employment Report really sent that thing like a rocket ship higher. Gold goes higher 25 basis points today, ends around 12.57. And then you get the mini Russell. The mini Russell was fun today, wasn't it? That was fun. It was fun trading Russell today. Just when you thought you would miss the move, it retraced back up and gave you another chance to sell it back down. Just love being a trader when we had markets like we saw today on the Russell. Russell still ended down 50 basis points, 0.5% at about 1090. Some other news that we saw come out today, the ECB now is rumored to be forced to cut rates one more time out of fear of deflation. Now, you know what deflation is, right? Deflation, opposite of inflation. Actually, it's not. Disinflation is the opposite of inflation. Disinflation would be when inflation numbers are coming down. Deflation is actually negative inflation, right? So it's almost as if things are getting cheaper as we go forward. Now, why is deflation a threat? Why do we care about deflation? Well, what is inflation? Inflation is when the value of money is less. And what that usually results in is that we can't afford to buy things because they continue to get higher priced and our money is worth less. Okay? One of the big concerns about all of the stimulus, right, and all the printing of money is that the money that we have, when there's millions more of it, now the money I've got already is worth less. So that's inflation. Now, in today's society, a lot of economists, especially our doves, Janet Yellen, Ben Helicopter Bernanke, okay, Alan Greenspan before him, they believed in lower interest rates. They were doves, which means that our Fed chair people, right, chair people, I wonder if that's the real technical term. We get a chairperson in Janet Yellen, a chairman in Bernanke, and okay, anyways, we'll leave that to the critics. Bottom line is, though, is that our economic policy in the U.S. and pretty much around the world, because unfortunately the U.S. is the dog that wags the tail when it comes to economic policy, whether you agree with it or not, that's the reality. But the deal is, we have been encouraging inflation because the theory behind it is that with inflation, the economy is still going to be growing. Meanwhile, your dollar bills or euros are worth less. But I know that sounds bad, but think about the other scenario, deflation. In deflation, now our dollars are worth more. But what that does is it means the debt that our countries have is also proportionately higher. Okay, that's a big problem because now with deflation, the mark of deflation is a stagnant economy. So we've got inflation where the economy is growing, but we have to keep up with our inflation, right? Our dollars are worth less. And then you got deflation, which is, I think, to be worse, where we have the economy struggling to grow, fewer jobs, fewer opportunity, but hey, we got more money. You see how there's a kind of a balancing act there? That's why they get paid so much, right? These crazy economists at the Federal Reserve banks around the world. They get a pretty tough job. Here in the U.S., they want the economy growing. They want inflation, but they don't want it. What do they say? 0.6 or 0.8% was their max. So our Fed has some targets they want to keep pushing the economy forward, but they don't want to let inflation creep in too quickly. because then all of a sudden you can get runaway inflation. We'll save that for another day. The bottom line is the ECB might have to cut those rates in the month of March. You know what that means, right? Euro, look out below. You're going to see those currencies start to drop. Dollar will rise, so will equities. So this could have a real big domino effect into our equity markets. The European equity markets have been red hot, just like the U.S. equity markets. So this is going to shake things up in the month of March. Remember, too, the month of March is always the most difficult month of the year. I'll wait until we get there. We'll talk more about it maybe end of the month this month. But the month of March is historically, for me personally, the most challenging month of the year. And it looks like the ECB is not going to make it any easier on us. Coming out tomorrow, Thursday, got a big, important set of news tomorrow. Jobless claims at 8:30, international trade at 8:30, productivity and cost at 8:30. That's right. That's 3 news events. 2 of them are Red Star. What's the big deal about Red Star? Red Star news means most amount of eyeballs, most amount of volume, most amount of volatility, and the most trading opportunities. So be aware, tomorrow morning at 8:30 a.m. Eastern Time, we're going to sit on hands at 8:15. All right, we'll find something to do in the trade room, getting ready. We'll make sure all of our charts are ready to rock. But by 8:35, we're going to be looking for opportunities tomorrow morning. I couldn't tell you where they're going to be. That's the best part about being a trader. I don't need to predict. All I got to do tomorrow morning is sit down right here and see what's my trend, where's my pattern, what's my risk, and I'm in the trade. This day in history, February 5th, 1790. Knock, knock. I'm here to count the people in this household. We conducted our first census here in the U.S. 1790. Isn't it incredible? Gotta love history, right? Census, of course, being the head count of all of the people living in this country, right? Very, very long time ago. So this day in history, don't say I didn't teach you guys something today. All right, guys, we are just about getting ready here for a big day tomorrow. I had a great day today, but we got some work to do. We're not done yet. Don't go changing the channel yet. Let's grab some charts, roll those sleeves up, and let's get ready for Friday morning. Some optimistic thinking. We'll get ready for Thursday morning's price action. Let's get going. All right, guys and gals, welcome back here. Thanks for sticking around with me here this evening. It's Wednesday evening. We've got through the crude oil inventories today. Tomorrow we got jobless claims, international trade, productivity and cost, and everything's going to start at 8:30 a.m. tomorrow morning. So you want to be ready technically and mentally tomorrow morning for a big breakout trade, possibly right after 8:30. I'm going to begin first here with the black gold, the crude oil futures. And today was actually a very good example of how we saw an opening print that was outside of yesterday's range, but we never got a chance to find an entry pattern long, right? We never did. And it was pretty much down the entire time. So good example here overnight, or good example this morning. We'll talk about it this evening. When we have an opening print that was above, remember, I still need to find an entry pattern. And this morning was a great example of how right at 9 o'clock when the opening bell rang on crude, we literally never looked back. This thing sold off right away. So we had a gap up, and then it came right back down to fill that gap and really never left this range and pretty much stayed sideways. This is screaming at us right now that we're waiting for something, and we assume it's Friday's non-farm payroll report. I was actually quite surprised. Crude was very, very sluggish all day today. And there's nothing wrong with that, but we have to be aware that usually that's because we're waiting on something. And we can assume it's going to be Friday's non-farm payroll. So here today, we had a 2-day sideways range. Pretty typical trading range today. It wasn't narrower like it was yesterday. And you'll notice we closed right in the middle. Now, when you look at this chart, you can see that we have a volume footprint that is pretty much weighted right to the middle. So the most amount of volume was traded right inside the middle of this range. Now that's important. Whenever we see balance like this, it tells us that the market, well, is in balance. Buyers and sellers agree that this current price, 97.50 we'll call it, right? That's the value of crude oil right now. So if that's the value right now, and we can see the buyers and sellers agree on that value, because if they didn't agree on that, price would have gone higher or lower. Okay, the current market price at 97.38, 97.50 area, we assume the markets are waiting for something to give them a reason to either go higher or lower. Maybe it will come tomorrow. Tomorrow we have jobless claims starting off at 8:30. That might get the party going early tomorrow on crude. Who knows? It's difficult to predict what's going to get this thing moving. It might be comments out of London overnight. It may be something that happens in China. We don't care, but all we do know, though, is that tomorrow morning at 9 o'clock in the morning, if we see an opening print above 98.14, I'm going to be looking to enter into a trade long. Today, we never even got a chance to get long. It just sold right off at 9 o'clock and never gave me a chance to even consider a buying opportunity. If we get in below 96.78, if we open up below 96.78, I'm looking for a short position. All right? Now, keep an eye on this 95.21 because 95.21 is going to be an easy target. This is the prior week low, 95.21. So an opening print below 96.78, I'm definitely looking to get short down to 95.21. On the opposite direction, we have the prior week's high at 98.59. So that may end up spoiling the party here if we do open above 98.14. If we open above 98.59 tomorrow morning, this should be very bullish and we'll immediately again start looking for buying opportunities. So really anything above 98.14 or 98.59, and we're going to be looking for those buying opportunities tomorrow morning. This typical range, this sideways type of day with this balanced volume that we see really tells us that we might be waiting until Friday, and we have to wait tomorrow morning to see what the price action looks like. All right? Once we know that, then we can plan accordingly and we can execute our plan. Moving forward, taking a look here at the anchor chart. On the anchor chart, we can see here, well, now remember, I want to remind you guys that this is the last step of my analysis. The beginning steps you can find posted right below this video. I've given you guys all the different snapshots of the charts that I'm using. So you can see the progression as I went from the 34 to the 21 to the 13 all the way down. Okay, so here I am now, and what we can see right now on this anchor chart is that just like that VIP chart, we are right in the middle. We're right in the middle. You can see we're in the middle from the high and the low of this price wedge. Now, what do we know about a price wedge? We know that a price wedge tells us we're getting lower highs and we're getting higher lows. The most important thing, though, is that it tells me to buy the lows and sell the highs. So my plan needs to be, if I find myself at the lows, I need to be looking to be a buyer. I definitely don't want to be selling those lows. If I can get below, then I can start getting to the short side. But you know me, I'm not going to sell into support. I always want to sell at resistance, at a premium. Speaking of which, as you can see here, we have a short-term bearish trend. Now, of course, we're still in the middle of this range, which means it's going to be a little bit sloppy. But as of right now, though, we have all the green light we need here to start selling short. This is going to be a lower percentage area right in the middle of this price wedge. But as you can see, though, I've got all my key moving averages are above me. I've got a bearish trend, a lower low, and I'm at a premium. So this would make all the sense in the world here to look for an entry pattern now to get short. And where's my target? Yeah, that's the big variable. I do not want to sell directly into this 96.49 to 96.69 range. This is not what I want to be selling into down here. So if I sell short here this evening, I'm going to take some profit off. It looks like that trend line might interrupt a little bit, so we'll say 96.80 or so. 96.80 would be your target. And then again, what I'd be doing is taking a short down to the low and then looking for an entry long. And you know where we're going, right back up to the highs. So buy the lows, take profit of the highs. Sell the highs, take profit of the lows. If we happen to break out now, get me above this resistance, and then I'm good to go to the upside here. Get me below this support, and then again, I'm good to go here to the downside. You can see I've listed some levels there for us to use as profit targets above. Most important thing that I can tell you right now is to be patient. We don't have a lot of confidence right now as far as direction, which means technicals are going to be key. Right now, I have a green light to get short, but I'm right in the middle of this range, so I need to be careful. The best bet right now for crude is going to be to wait for tomorrow morning's opening bell at 9 o'clock and see where we are at that time. I've already given you the levels to be ready for tomorrow. And again, whether we open above, below, or inside the range, we're going to make an adjustment tomorrow morning and then execute the plan accordingly. So the Texas Tea, the black gold. Let's move over now to the gold, shall we? One of my favorite markets as a trader, the gold futures. This market was fun today. This was a fun trade today. Now, today on gold was a great example of how a narrow range yesterday will oftentimes result in a very wide range the following day. And you can see that's exactly what happened. So we were amped up this morning. I was excited for a big move type of day today. And we definitely got it from gold and the equities. The problem was crude was stuck in the mud all morning waiting for that inventory report, so we didn't get much movement out of crude. We did, though, get a ton of opportunity out of gold. In fact, this morning we saw this ADP Employment report at 8:15 came out, and when that came out, we literally saw this thing take off. We bought this on the way up. And then if you remember, I said earlier on yesterday's call, remember what I said about the prior week high? Going to be some resistance. We bought all the way up to that prior week high, knowing that it was the prior week high and knowing that it was just basic news. Remember, there's only a few news reports that I'm expecting to have continued impact. This is not one of them. So big pops usually equal big drops, and that's exactly what happened. So we were able to grab a hold of this and buy on the way up, made about 60 ticks on the way up, and then reversed it and came right back down and took it short. So it was a very easy trade. It was fun. News came out, saw the jump up, bought it, took our profit at the highs, came right back down, sold it, and took our profit back at the lows. It was a relatively easy day. We had a bullish move today, a wide range, and what is amazing, is the fact that it came all the way back down and closed almost where it left off yesterday. Incredible. So we look at the volume footprint on this, and we can see right away here. When you look at the volume, remember what happened yesterday. Look at yesterday. The volume was balanced yesterday. So we knew that today was probably going to be a big breakout type day, and it was. But what was very interesting was that look at the volume here. Little bit of volume up near those highs. But the majority of the volume came right now down towards the lows. Now, I want you to think about that for a second. I want you to think about what that's telling us. Little bit of volume at the high, a whole lot of volume at the low. Now, volume, think of volume like casting your vote, right? So if we were going to cast our vote for what direction price was going to go next, look at the volume. This is why these market profile-based kind of horizontal histograms, right? These kind of sideways histograms are very, very effective at visually telling us where the interest was. And right now, I can see the interest was not at the highs. That was not where the interest was. Because if it was, we would have seen volume up there, those highs. What we saw we saw interest right here. We saw interest right there, didn't we? Right back in the middle of that range. So basically what this tells me is that the news came out, we had some fun, we made our money, but as of the end of the day today, the votes were counted, and we know who got the vote. The sellers did, right? The sellers won the day. They may not have closed at the lows, but they closed it right back down with high volume at the low of its range today, which is very, very important for tomorrow. Now, we're not expecting to see a move higher. Obviously, like I keep saying, we're not going to predict. I'm going to be ready for it, but I'm not expecting it. Get me above 74.5 tomorrow morning at 8:20 a.m. when we open up. I'm looking for a buying opportunity, and I'm going to be bullish. Get me below the 51.8, which is where I would expect us to be going for tomorrow. Okay, now right now we're trading right about 58s right now here in the evening session. But get me below 51.8, and just like I said yesterday, look out for that prior week low. Remember, we got 2 weeks of lows here. So we're probably going to get down to that 1237 area tomorrow morning. Get me below 1251, and I'm off of the races selling short down to that 1237.9. Okay? Continuing to move here. Here's my anchor chart now on the gold. And the anchor chart on gold looks very similar to what we just saw on crude oil. You can see here I have, if I zoom out here, you can see. Now remember, I got all the charts that I'm using here. All of these charts are posted for you below the video on the blog. So this is just the most recent update to the charts. You can see all the stuff I'm looking at on the blog. So here we go. Big, big price wedge. Okay, now what this is this is actually the low of a big bull channel. Okay, that's actually a channel low. This dotted white line here. Okay, that's a channel. And then up top here, we have a long-term trend line. And this long-term trend line is going to produce the same thing we saw in crude oil, which is that range-bound price wedge. Now, who was listening the first time around? What do we do with a price wedge? We buy the lows, and we sell the highs. Okay. Now, you can also see that we have a short-term bearish trend. And even more so, I have price on gold that is priced at a premium right now. I have all the moving averages are above me, and I've got wide open space below me. There's no reason why I can't take a trade short right now on the gold. All I need is the proper entry pattern. Where would my target be for a short? My target would be at 1245.7, right? The higher end of this range. If I was going long, which I'm not looking for right now, but I will, once we test the lows, I'll take my profit, and then you know what I'm trying to do. I'm going to buy those lows with a target of what? Well, the target right now will be 71.1. But I would think, though, that target will be somewhere around, let's say 1270, let's say 1268. All right, tough to tell right now. I'm really stretching it right now, trying to predict that all the way into tomorrow afternoon. So just be aware, I will be updating this chart tomorrow morning with our students in our trade room. So if you want to get the updates, come out and see me. We do these all day long. We're always making sure that we're technically prepared for whatever's coming down the road. So you can see here, I got plenty of room here to go short right now. Target at 45.7. If we end up doing that overnight, just be careful. We are in the middle of this range. Okay, so be on your best behavior. Keep your risk to a minimum. Okay, I would probably, though, if we don't see this thing start to move lower here, you're going to want to wait here for tomorrow morning's 8:20 opening bell, and we're going to play it just like we said on crude. We're not going to predict. I can sell short right now, or I can come back tomorrow morning, wait for the opening bell, analyze the opening bell, and then use that as a clue to go forward from there. Again, don't forget to check out all the charts on the blog for that gold, because there's a lot of support and resistance levels that I've marked up there for you. Moving forward, we can't forget about the mighty mini Russell. Now, the Russell was also a very, very fun day today. It really was. Now, looking at this chart, yeah. We didn't get the big move like we saw on Monday. Monday was just phenomenal. We ended 3% lower on Monday, right? We literally ended the day lower. That was the big thing on Monday. Tuesday, we had this very narrow range. And Wednesday, this was a really exciting morning to be trading Russell, because what happened was we opened inside of the range. And of course, when we open inside the range, what do we usually expect? A fake out breakout, right? We expect these lows to be holding. So we expected price to go whoop and come right back up, and that's exactly what it did. So we had a ball here this morning buying this low and bringing it back up, all right? At the same time, while it was pushing lower, we're selling on the way down, right? Because we saw right away this morning the bears took complete control. Remember what happened. We had ADP Employment Report that came out very weak. We had ISM Manufacturing that was weak. So it didn't take a lot to get selling off on the equities. We're still seeing some bearishness in the equities in Europe. So it was pretty easy to kind of give it a little push to move lower. So as it was moving lower, we were selling short. Sold all the way down to the low. And then sure enough, we began looking for the reversal. And that's what happened. Bought the low,
reversed it back up, and then it pretty much just sat there for the balance of the day from there. But what a great roller coaster ride. Selling short, taking our profit at the low, just like the plan says. That's the most important thing to remember, is that we're not winging this, guys. We're not winging this. If you come in and join me as a student, I'm going to teach you all about opening bell analysis. This opening bell analysis told me that we had a chance to sell short down to the low. But then at those lows, we had to be aware it was going to try to push higher. All right? I'll go into a lot more detail on that stuff in our ongoing training sessions with our students at School of Trade. Bottom line, I'm not trying to predict. We had a lower day today, a relatively narrow range, and of course, we finished in the middle. Again, look at that volume. Look at that volume. The volume tells a story. The most amount of volume was traded above the range from Monday. Look at this. A little bit of volume was here, but not too long before it got sucked back up in. So if the volume analysis is correct right now, we are going to stay above that 1085 area, and I'm excited to see what tomorrow is going to look like. Opening print tomorrow above 96.7, we're bullish. Now we have this big, huge range down here. If we can get above 1104.9, we're probably going to make our way up to this 27.7 pretty darn quick. That was Monday's open, right? That was the beginning of the week. So we're probably going to see that price jump up if we get a bullish print tomorrow morning. If we get a bearish print, 1078 even. That's my line in the sand. Opening print tomorrow at 9:30 on the Russell. If it's below that 1078, I'm looking immediately to sell short. I've got some targets down here, but boy, it's a big hop, skip, and a jump until we hit this 1031.9. Absolutely. We may get stuck in the mud tomorrow around these support levels here. You can see 78, 74, 71. So just be aware, I want to get below these support levels. I'm looking for shorts. And again, these equity markets have been such a roller coaster ride the past few weeks. I won't even begin to try to predict, but I can't wait to see what tomorrow's opening print looks like. Now, take a look at the anchor chart. Wrapping up here on the anchor chart, we are in a delicious little area here to be selling short, right? This looks like a tasty spot to be looking for a short. Why do I say that? Well, again, go to my blog, take a look at all the charts that I've uploaded to the blog tonight. You're going to see right there the progression from the slowest time frames. We are bearish. I've got a long-term bearish channel. If I zoom all the way out on this, you can see that long-term bearish channel. You can clearly see we are bearish. When I zoom back in, now what I can see is that I'm grinding my way higher here right now, but it looks like a fish swimming against the current. I'm looking for this thing to keep going lower, right? That's where I want it to go, lower. And I'm in a great spot to do it. I always want to sell at a premium. This is a discount. This is a premium. Okay? Premium, premium, discount, discount, discount. Am I right now, am I at a discount or a premium? I'm at a premium. That tells me I want to sell. So all I have to do now is get me below these key moving averages. Get me under 1088. Get me below 1088. And we are off of the races selling short. Where's my target? 81.7, 78 even. The low of this channel, right? No reason why we can't use the low of that channel. So targets for your shorts, 81.7. The low of day at 78. The low of the channel, which, by the way, might be lower if this happens later on in the day tomorrow. And then, are you ready? Write this one down. Write this one down. Assuming we do not go higher, as long as we do not get above this 94.6, assuming we go lower, my most important target is at 1068.3. I've got one more target down here for you if you guys want to play a little bit of hardball at 1061. But I'm going to be gunning for that 1068, especially if it happens later in the day. Because what's going to happen is all of a sudden now, remember, if we go straight down, that channel is in my way. But if we hang out a little bit and then we go, like I said, if it happens later in the session tomorrow, that 1068.3 is going to be a key level. All right? So what I'll do is I'm looking to sell. I'm going to sell pretty much right here. I want to get below 1088. If we do go higher, though, you better believe it, I'm trying to sell again. I'm going to sell that 1099. I will sell that big round number, absolutely. But if that happens, though, just be aware this 1068.3 will be readjusted. It'll be around that area, but it will be a little bit different. So again, if you want to get the updated version of that tomorrow afternoon, tomorrow morning, come out and see me in the trade room, and I'll update that with tomorrow's current price action. Guys and gals, it has been a fantastic week of trading in our room. We're making money every day. We're having fun while we're doing it. Guys, if you're not enjoying your day every day, looking forward to every day, making money every day, if you're not moving forward in your career every day, what are you wasting your time for? Guys, if you're not getting the results that you're looking for, the only way to make change is with change. It's time for a change, guys. It's time for you to take the first step. Join my trial. Join as a beginner. Join as an intermediate. Guys, if you want to make this a reality, this is your best opportunity right now. You can hear it in my voice. I am excited for every day that I go to work every day. If you don't have that same excitement that I do, guys, what are you waiting for? What are you waiting for? Life's too short. We have a tremendous opportunity right in front of us. All right, off my soapbox. Thank you so much for being here today. Once again, Joseph from School of Trade, from Los Angeles at our corporate office at School of Trade. I want to thank you guys for watching. Don't forget to send this to a friend. Don't forget to send me your feedback. And you better come see me tomorrow morning. If not as a member, at least tomorrow afternoon as part of our free trial. Thanks so much for being here, guys. We'll see you next time. Adios, amigos. Bye-bye for now.